Back to the Tier 1 Trading Live Trading Room, the New York session. How's everyone doing today? Do me a favor. Let me know if you can see my voice. Let me know if you can hear my screen as we get ready to kick off another day of trading excellence. Let me adjust the chat a little bit here. Perfect. Thank you for keeping my secret, Bobby. I appreciate it. So we got an interesting day in the market today. We spoke about this yesterday. We had our New Zealand rate hike yesterday. Today we have a few things coming out at 8:30. We have core retail sales coming out. And later today we have the FOMC meeting minutes. And if you guys are new, if you haven't been around for a while, we are in stop and go traffic when it comes to the markets, meaning that everything right now, as it generally is, actually, interest rates are always the biggest cog in like the market's machine. Just typically it's far and few between hikes or cuts, but we're in a very interesting economic situation worldwide where everyone is making decisions, whether most are hiking, some are cutting, and then many will be transitioning from aggressively hiking to easing off the hikes to potentially cutting. So this is an interesting period of time where we're getting just hammered in the face. And I've been trading since 2009, and I've experienced not necessarily something like this, but I've experienced hikes and cuts, as you can imagine. But usually there are massive gaps in between where you have these hiking cycle, and then everything is kind of cool for a while, and then you cut things, right? And we go into a recession, and everything is cool for a while. I've never seen a situation where we've aggressively gone from one and then basically kind of did like a stop and reverse, and we'll probably be going aggressively to another. So this is fun. This is experience. This is something that will help me in the future, just as past economic events have. Now, that being said, my expectation for the day is that the markets will look something like this until 2 o'clock. Yes, that is me. That is your boy. After a long weekend of a bachelor party some years ago, I'll let you guys do the math on that. But that is my expectation for the day. With that being said, there's some pretty decent opportunities setting up in the market. They're pretty similar across the board, meaning there's about two or three types of setups that are happening on a handful of pairs, because many of these pairs are moving exactly the same. And for today's trade of the day, because that's what I want to give the live streamers out there. Welcome, live streamers, by the way, for you guys watching on, what is this, on the first pair. I do it on Facebook. I do it on YouTube. I do it on LinkedIn, maybe. Welcome. Do me a favor, hit that like button, support what I'm doing here so we can keep this first session going. And of course, if you want to join the full session and a lot more stuff, head over to www.tier1trading.com and you can check that stuff out. But we're going to start here on, we're going to go to the pound yen, the beast, right? The pound yen, euro yen, very similar. But the pound yen is in a slightly better situation, hey, Phil, than the euro yen, and I'll show you why. So overall, the pound yen has been in consolidation. And before we get into that, I want to remind you of this situation. And I think this was during the Bridging the Gap workshop. We spoke about this. But do you guys remember the conversation we had on multiple pattern formations? And the question came up, which one do I take? Do I take the bigger one? Do I take the smaller one? I think that was all these conversations run together, right? We have them so many times. But I think that was last week during the workshop. And we put together a really cool lesson on that, saying, the bird in the hand is worth more than two in the bush. And, there are different ways you can have rules. My rules are I never want to pass on a valid pattern for a potential pattern. And this is just a perfect example of, let's say someone for some reason was waiting on the bigger pattern. And again, we mentioned that the bigger pattern didn't even exist on this time frame. So another thing you need to take into account is what time frame you're trading on. But what if someone would have been scared away by the bigger pattern happening that they passed on the smaller pattern? Well, can you guys see what the smaller pattern did? Can you see what the smaller pattern did? Boom, right? Straight to target winner, pretty much pain-free, little double bottom action, teased you in the beginning to kind of scare you out, right? And I guarantee traders were scared out. How do I know? Because I got emails about this very setup of the market going up, me getting emails of people being very excited, the market going down back to break even, and people bailing on their positions. And they used any excuse they could. I heard this news. And then, I didn't get the emails of the pain afterwards, but it's there. But a perfect example of why we have to have predetermined rules, why we need to follow those rules, and why our rules can't be emotionally based. Because from a technical perspective, right, in this situation, again, this is a little bit of a reminder, is there any reason to bail or not take the first one because of the second one? Right? And this is why you guys hear me a lot. I always say, and I try to make a habit of saying this, potential Gartley, potential this, potential that, because it's not there until it happens. It could happen. But to be honest with you, if you're someone that has ever analyzed anything in the market, most of your analysis never pans out. Would I be correct in saying that? Like most of the time you do all this analysis. Oh, if we do this, then we're going to do that. And then like the market does something else. It goes left. It goes backwards. You're like, all right. So we can't make decisions off of, we are making decisions off of predictions, but we're making those decisions after what we need to be fulfilled is fulfilled. We're not necessarily doing it in advance. So it's important that we remember that. So I want to bring that up because I remember that from a few weeks ago, and I thought that was very important. I believe that was from the Bridging the Gap workshop, which, by the way, recordings are up until the 20th. So if you didn't have a chance to check it out, or if you just want to review it, make sure you go and do that by the 20th. We will all be taken down. And despite your emails and whatnot, we will not be putting them back up. So let's go over to the pound yen on a daily. This is something else we should also be familiar with. And again, if you spend enough time with me, especially on these higher time frames, things don't change that often. So all we're doing is reviewing, and we're adding different clues each time we see it. And we talked about the pound yen, right? You can see big old double top retest of structure up here, whatever you want to call it, right? Price rallies up, big retracement down. I should draw it like this. That way we can brag about another advanced pattern, right? Price rallies down, puts in a cipher, double tops at the highs. And then we do this, right? We come down, we find structure support. We rally up. Do we go higher or lower? Is our high higher or lower? I think I'm bringing this bad boy in here. You're such a little beautiful creature. I got to pay Darren a tax every time I find one of these bad boys. Yep. Lower high, right? Then we come back down and we press against the same lows, the same big rejection candle, rejection area right down there. And we make another run at the highs. And what do we do this time? Are we higher or lower? Real quick, Phil over on YouTube says, technicals can't differentiate between emotions. That's what I love about technical trading. Once you react, you basically lost. Yep. You become almost as binary as possible. There is some subjectivity and discretion depending on your trading style. And some people like having that. Some people don't have that. And there are ways you can have more of it. There are ways you can have less of it. But yeah, everything's got to be centered around a rules umbrella, a rules bubble. And that keeps us from doing the dumb stuff that we want to do. Because as traders, we all want to do dumb stuff. We do. Let's be honest. So we need a governor stopping us from doing the dumb stuff. We need like a leash. We got a leash around our neck, and as soon as we kind of venture out and want to do something dumb, it pulls us back. It reminds me of my neighbor's dog. Actually, it's our dog kind of, but it's our neighbor's dog. But we play with him a lot. And poor guy, I think they think he's annoying us, but he's not. But he's a very energetic dog. He's a poodle mixed with something, right? But he's got this like shock collar. And it's like, as soon as they think he's too rowdy or like bothering us, they zap him back, and he pouts and goes back to his place. I feel so bad for the guy. But that's what we have as traders. Our rules are that shock collar, where it's like, when we take it too far, get back or you get burnt. And if you go past that limit, you learn your lesson. So lower highs once again. Oliver says, I need to make my trading rules more black and white. Well, you know what you can do, Oliver. Are you have you shot us your trading plan, or have you shot anyone your trading rules yet? Recently, I should say. Cody says, maybe I'll take up that strategy, put the shock collar on. Well, I'll tell you a cool story once we get Oliver's question about a different type of shock collar that a trader of ours used before. I've told you the story before. Oliver says, no, not for a while. I did my trade, but I did my trade review and made it something I want to work on. Okay. Yeah. So yeah, once you get it to the next level, once you're ready, yeah, shoot it to us again. And we'll chop it up. We'll break it down. We'll send it back to you, and you'll come back stronger. So whenever you're ready, we'll be here. Yep, we'll be here for you. No rush. Whenever you're ready, and we'll help determine, whether things are black and white, whether things are gray, and what needs tweaking. We really enjoy doing that. But yeah, Cody, I had a trading buddy of mine that I worked with, had discipline problems, and what he did was he made a rule, and his rule was, whenever he broke his rules, he had to buy his wife a present. And lo and behold, his wife, who knows nothing about trading, who has never had any interest in trading, all of a sudden, when the results could potentially benefit her, she was standing over his back every trade, just waiting. And for the first few months, right, I remember him telling me this. He said for the first few months, because he was making a lot of psychological mistakes, he had to buy his wife a handful of presents. And what he told me was this. He said, Akil, I finally made a change. This was my first month where I followed my rules 100%. I said, oh, cool. How'd that happen? Well, he said, there was a shift that was made. He said, all of a sudden, the pain of taking a bad trade, which used to be nothing, increased because of the amount of pain and money that it cost for him to buy his wife presents. He said it cost him more to buy his wife presents than to just stay out of a situation or just take his stop loss where it was supposed to be. I'm like, hey, works for you. And of course I said all this quietly so my wife wouldn't hear. But it was funny. The next week, I think his wife signed up for the course. She wanted to learn more so she can catch him making more mistakes. Just kidding on the last part, but the first part's a real story. So you can see us continuing to test these lows, and each time we push up, we are making lower highs, right? And again, this is one of my favorite pattern formations. It's not textbook because nothing in the real markets ever is, but this is a descending triangle where the bulls keep pushing it, the bears keep pushing it down to the same floor, that bottom trend line. But the bulls are having a harder and harder time pushing it up. And if you guys are new, if you want a great book, not a great book, a great reference guide on classic chart patterns, there's a lot of information there. Now, most of it is based off the stock market. I'll tell you this disclaimer. You cannot base the stats from stock markets in the Forex market. Two completely different markets as far as directional movement. So I never took the stats into account from a just a literal perspective. I'd look at differences and stuff like that. But you can't just assume that, hey, because something worked in the stock market, it's going to work the same in the Forex market or the crypto market or whatever you may be trading, and vice versa. But the Encyclopedia of Chart Patterns by Thomas Bulkowski, good book, good reference guide. And again, it's not a book where you read front to back and you learn something like that, but it's a book where you see something in the market or you hear a term you're on the internet and you hear oh, we spotted a cup and handle here on the pound dollar. And you're like, well, what's a cup and handle? You open that book up, you flip to the page that says cup and handles, and you can get some examples. You can read about it. It is it's a reference guide. You do not read it from front to back. You go to it when you have a question. You go to specifically the section that you want to learn about, and you ignore everything else. But a really good reference guide that I don't mention enough, the Encyclopedia of Chart Patterns. I have the second edition, which I'm assuming is the upgrade of the first edition, but decent book by Thomas Bulkowski. So we got an ascending triangle right here, which we'll talk a little bit about this later, but typically what you expect out of this is a bearish breakout. There's not a great amount of room on the bearish breakout side here because we don't really have a we've basically got a little bit of consolidation and wigglage before that happens, but nonetheless, we would still expect a break down to the downside, and there is a potential we can come back to like the 157 level. But within this consolidation, do you guys see anything else happening here? Because we know that consolidation breeds pattern formations. We've seen about 4 of them over the past, over the summer here with pound yen, right? Phil says, you need me to send you a copy of that. That book is too big to mail, Phil. It is, as Orsi mentioned, it is a tree stump of a book. It is too big to mail. There are the postage that it would cost to mail it to you would cost more than the book. We have forming a potential advanced pattern formation. We can see this a little clearer on the 4 hour as well. I'll stick here on the daily just because so we're not bouncing back and forth too much. But if we look at our starting point right up here, right, our last high, swing high to swing low, anchor leg, good example of anchor leg. That's going to be our X to A. Our move back up here is going to be our A to B, coming to the 65.5 Fibonacci retracement. A move back down here is going to be our C leg, again, remaining above that A. And if we got to violate this B leg, which is level of structure, which will also offer trading opportunities. But if we violate that level, we're going to have a CD completion right here at 165.17. I'm not a trend line drawer. I draw these things on very loosely just to kind of give you the idea of the formation. If you're a trend line person, perhaps that lines up with a trend line. I won't get into drawing trend lines because everyone does them differently. I would do it like this, connecting the first two, but some like to cheat and kind of adjust them. That's up to you. But the point is the Gartley completion, right? The Gartley completion continues our pattern of lower highs across the top. And there's 2 ways you can trade this thing, or there's multiple ways you can trade this thing, more than 2 ways. But one, you can trade it just as a typical Gartley. You can see the targets in front of you printed out, 162.98, 161.63 before any adjustments are made. But if you're someone that is expecting and looking for a bigger move, like a breakdown from this descending triangle, this is also an opportunity to get involved in that at a very good spot, because we talk about 3 ways to trade breakouts, right? You can establish a position prior to the breakout, which would be this, right? This is the cheapest point you're going to get in this breakout, right? The cheapest point you're going to get because it's right near the upper trend line, right? And you're looking for a breakout down to 157s. Right. So there's prior to the breakout, there's during the breakout, which means you're trading it as the market's breaking out. And then after the breakout, which is waiting for the confirmed breakout to pull back and then the breakdown like that. So this would be kind of that establishing in your position prior to the breakout. And of course, you can always blend all the things together, right? You can half seize it, right? You can take Gartley targets, but maybe leave a partial position on for the breakout. You can trade only to Gartley. You can trade only to breakout. That's going to be up to you and the specifics of your trading plan. But I thought it was a pretty decent opportunity. And again, where we're combining multiple things in the same area. And our job as traders, as I always say, is to be like lawyers or to be like detectives where, we're not looking for one clue. We are looking for multiple clues, and the more clues we have, the better case we can make. The better case we can make, the better chance we have of winning our argument. So, decent setup here on the pound yen. Let me read a book right here. Keo talking about technical books. Have you read Technical Analysis of Stock Market Profits? Yes, I have. Yeah, that is probably the most classic book out there. It is if I remember correctly, it's a really hard one to find. It's a really old book. I got it. I I do have it, right? Give me 1 second. Let me roll away. Yeah, I got it. Yeah, I do have it. I wasn't sure if there was like a special edition of it that I have, but yeah, I do have it. That's a good book. I tell you what, when I went through technical analysis and stock market profits, I'll bring up Amazon real quick so you can see it. So when I went through my phase of trading, and long story short, I went through a lot of stuff. Sorry, I can't type and talk at the same thing. Give me a second. Technical, nope. Analysis and stock market profits. There we go. Shabaka. When I went through my trading, and you're gonna see different. I'm trying to see that if I can find the title that I look like that I have. It's a different. There's different versions of it. Like the original is hard to find, but there's different versions of it. This is the one that shows up right now when I type it in. Mine has a blue cover. It was difficult for me to find at the time. But when I went through my trading journey, or as I'm going through my trading journey, did it say 165, Cody? I thought it said like 60. I may be wrong. But when I went through my trading journey, I kind of went backwards. So I started off. With kind of. I went back after I learned how to trade. And sorry, I'm still trying to do two things at the same time. Now I'm trying to double check the price. Yeah, it looks like it's $60 for the one that I found on Amazon right now. But yeah, it was a tough one to find for a good price because there's not a lot left. But I went backwards. So I started learning about classical patterns after I was already an established trader, right? So after I was already established trader, I really started falling in love with price action. I started off by kind of just wanting a strategy that can make me money and not really focusing on being a chartist, but kind of being able to find the thing that makes me money. And I don't think there's anything wrong with that. Like you need to get in my situation, I had quit 3 jobs. I had dedicated myself to trading live and I was running out of time. So I needed something that can get the ball rolling. I needed something that can bring in some money as I continue to grow, right? There was a time urgency there. But as I fell more in love with reading a price chart, I wanted to learn. I really fell in love with these classical patterns, right? Your wedges, your breakouts, your head and shoulders, your stuff like that. So I kind of went backwards and I started reading a lot of the original books. And you'll hear Jason Greystone talk about this all the time. We spoke about it on last week's coffee break. By the way, we got a coffee break today talking about I think we're going to talk about the crash of the markets and will they all blow up and not exist anymore? Got a good question about that. We'll be live at 10 o'clock, Trader Coffee Break, if you want to check that out. But he was talking a lot about Ray Dalio and talking about how the market just puts in repetitive patterns. Now it does it a little bit different, and it hides them very well. But there are classic repetitive patterns that the market does because the market is nothing more, or the price chart, I should say, is nothing more than the visual representation of the market's participants, which is us. The market is driven off of psychology and crowd psychology. And as human beings, we really don't change too much, right? Historically, we do the same things over and over again. So if you can get really good at understanding those patterns, it gives you a massive edge in the market. So I wanted to understand those classical patterns. So, and I'm a big Peter Brandt fan as well. So I heard him mention that many times as one of his Bibles. So I picked it up when I kind of went my backwards journey of simplifying things. So yeah, I think it's a decent book. I think it's a good one to if you're into classical patterns. Yeah, I think it's a solid book. I probably should mention it more, but it's a hard one to find, which is why I don't, or at least it was a hard one to find. So good stuff. All right, for you guys watching the live stream, I'm gonna kick you out. I got someone called Coach asking if I can do Canada Swiss. I cannot. I'm sorry. Here on the live stream, we only do one trade of the day to let you guys go. That way we keep it fair for our tier 1 members. But if you want to join, we got a 14-day trial membership. Just head over to www.tier1trading.com. You can sign up for a 14-day trial membership. You can take some courses. You can hop in the live room, New York and the London room. You can stay for the full session. You can download some software, get all types of cool stuff. And that way you're not limited to just a single pair. So I thank you guys for joining us. Remember, Bridging the Gap workshop, those things are going to be available until the 20th. I got to keep reminding you because they are going to be going down. And I don't want you guys getting angry. But I'll see you guys tomorrow, same time, same place, 2 p.m. today, FOMC minutes. Be careful about that. And please hit that like button. And if you have any questions, put them in the comment section below before you head out. No